All right, financial math classes. Today we're talking about vehicle insurance. The math for today's lesson is actually pretty simple. It's mostly just adding some stuff up, a little bit of multiplying here and there, but it's pretty simple math. But there's a lot that goes into vehicle insurance that we're going to discuss briefly here, and then we'll talk about more in class. But it's important for you to buy vehicle insurance. In the state of California, it is the law. You must be insured to operate a motor vehicle. But there's a couple things you need to know about insurance. First, there's the liability insurance. This covers financial protection to you, the policyholder, against claims for bodily injury and property damage as a result of an accident. So this would cover your property, depending on your insurance, your property, your body, and then people in other vehicle if there was a multi-car collision. The combined coverage is also often listed as 100, 350. So the 100, 300 part refers to bodial injury coverage. So that means the 100 would be the insurance company will pay up to $100,000 for any one person injured, and then $300,000 for if there's more than one person injured. And then the 50 refers to property damage limit of $50,000. All right, so the 130 refer to bodily injury, the 50 refers to property damage. The other types of insurance, there's collision insurance. So this covers your vehicle or any damage that is caused by a collision. And this can be a collision with another motor vehicle or an object like a telephone pole or a tree or something. There's comprehensive insurance, which covers damage to vehicles caused by something other than a collision. So fires, vandalism, theft, that sort of thing. And then all these have a deductible. The deductible is how much you will pay before the insurance starts paying. So if you have a $500 deductible, that means you pay the first $500, and then the insurance company will cover anything else that's more than $500. So the example here is if the total repair bill on your vehicle is $4,400, you pay the first $500, and then the insurance will cover the remaining $3,900. Right. The cost of your vehicle insurance is determined by a few things: the amount of insurance you carry, and then how much they're going to cover, how old your vehicle is, right? Because like newer vehicles tend to cost more to repair, but older vehicles also break down more, that sort of thing. And then the insurance rating group, depending on the size and value of your vehicle. The annual premium. So these things actually, we're not going to be calculating these things, insurance rating group. We're going to be using calculations given to us to calculate out how much insurance is going to cost. Annual premium is the amount you pay each year for insurance. These factors determine your annual premium. The annual base premium, which depends on the amount and type of coverage you carry, and then the driver rating factor, which depends on your age, marital status, number of miles you drive each week, whether you drive a long distance to work, and if you use your vehicle for pleasure or business. If several people drive your vehicle, the insurance company also uses the highest driver rating factor among them to determine the annual premium. Insurance companies use tables to determine your basic premium. You use these two formulas to determine annual premium. So the annual base premium is liability plus collision plus comprehensive. So you just add up all the premiums for whatever insurance coverage you have. And then once you have that annual base premium, you multiply it by the driver rating factor. Again, we're not going to calculate this. This is something insurance companies do. That's actually one of the real world applications from math and statistics is these people that are called actuaries calculate these things using sometimes complicated mathematical formulas to calculate what your driver rating factor, and they use these for all sorts of insurances, like life insurance is going to use this sort of thing. Depend on It's just they're evaluating their risk, the insurance company's risk for providing you insurance coverage. The greater risk it is to them, the more they're going to charge you. So, right. So if you drive more miles each week, you're in a greater risk of having an accident. So that means it's going to cost you more. All right. So let's just look at an example of this. I'm going to use my video out of the way. So Julie Spiros, age 21 and unmarried, drives her vehicle to and from work. Her driver rating factor is 1.85. Again, the age and marital status, this is all part of the driving rating factor. That goes to the insurance company calculating that, and has 1.85. Her vehicle is classified A11, and so that is the insurance rating group. Again, that's something, these are the tables that the, what am I saying? The insurance companies will use. She has $25,000 property damage, 5,100 bodily injury, and then a $50 deductible comprehensive and $50 deductible collision coverage. What is her base premium? What is her annual premium? So first thing, the annual premium, annual base premium, is we're gonna add up all the premiums here. So the annual liability premium. All right, so we're going to use this. So she has an 5,100. So we're in this column here, 5,100 bodily injury with a $50 deductible. Oh, excuse me, 5,100 bodily injury, 25,000 property damage. So here, so that is going to be here. So the liability premium is going to be 309. Plus, we need to now figure out the collision and comprehensive premium. So she is classified A11. So we need to go to the A11, right? The $50 deductible for the collision is $257. And then if you notice here, there's another A, and then the 11 here is A6. So the collision deductible or the collision premium is $257. And then the comprehensive is 86. So we add up all those. So 309 plus 257 plus 86. That comes out to 652. So our base annual premium is 652. And then the last part, the annual premium here, we take that annual base premium of 652 and we multiply it by her driver rating factor, 1.85. Multiply that out, that is $1,206.20. And that would do it for that. So just simple, just find the liability premium, collision premium, and comprehensive premium, add them together, and then you're going to multiply by the driver rating factor. So just make sure you're looking for reading the problems carefully and finding out all that information. That'll do it for today. We'll see you guys next time.